Good afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. After a disappointing end to last week following an escalation in the US and China trade tensions, global equity markets rallied strongly on hopes that there will be a truce thanks to positive comments from Donald Trump. Speaking at the G7, Donald Trump said the prospects for a US-China trade deal are better now than at any time since negotiations began. In the UK, the pound weakened 0.8% against the US dollar, but strengthened 0.4% against the euro following Boris Johnson's approval to suspend Parliament, suggesting the market has, by and large, priced in a no-deal Brexit. However, agree with it or not, proroguing Parliament does appear to have helped, as on Thursday the Danish Prime Minister said the EU should be as flexible and positive as possible in its negotiations in order to avoid a no-deal Brexit. And it has also been announced that UK and EU officials will intensify talks to avoid a no-deal Brexit. Additionally, it must be remembered a Brexit deal is also in the EU's interests. For example, the outlook for some of Germany's key industries is already far from rosy after several car makers and parts suppliers have recently issued profit warnings. And the main focal point for this week's economic data will be Friday's US employment data. Also on Friday, Jay Powell, the Fed chairman, will speak for the last time before the Fed's quiet period ahead of their next monetary policy meeting on 17th and 18th of September. So we will be listening out for any hints on the timing and size of their next interest rate cut. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.